Hey, everybody, it's Greg Harrelson here with Century 21, the Harrelson Group, of course, with my co-host Abe Safa. And it's that time of the week for us to come and share some news about Myrtle Beach Real Estate. So thank you for joining us on Myrtle Beach Real Estate TV. And before we get started, Abe, welcome to another week.
Yeah, Greg, good to see you as always. Yeah.
Yeah. Well, good. I know you've got some numbers as you always do for us, and we definitely want to take a look at those. But you and I had a conversation the other day about we're getting a lot of questions, right, from the consumer, and that is, what do we think is going to happen in the market? And we always say, look, we don't have crystal balls, but
Right.
we have opinions, but we don't have crystal balls. So opinions are are probably worth more to myself than my opinion, probably worth more to me than it is someone else. But I'm sure you're hearing the same thing. Is that right, Abe?
Yeah, no question.
Yeah. So let's just talk about that real quick before we get into the numbers. If somebody asks me, what do you think's going to happen with the market? I actually believe for the entire 2022, I really believe that the market's going to still remain strong. I believe there's going to be volatility in interest rates. I believe, but I don't believe that any kind of increases in interest rates will be enough to trigger a market correction. I do believe that it'll be enough for us to notice. It'll be enough for somebody to report on it within the news channels. But will it be enough to change the real estate market? I don't necessarily believe that'll be the case. I think we're still going to have a strong market. It'll be one of our best years, I believe, that we've had in a while. What's your take on it?
Yeah, I mean, so first, I mean, you said it's an opinion. It is an opinion, but also it is based on data, right? So it's
Yeah.
based on, because you and I look at a lot of numbers. We're not just guessing here. We're not just going by our gut feeling. So we do look at a lot of trends, a lot of numbers, a lot of leading indicators. And then we're on the front lines. We sell a lot of properties, you and I. So we also have that touch and feel of what's happening in the market. So we have a good
Yeah.
pulse.
Definitely
So
an educated opinion.
no question
Yeah.
whatsoever. That's my point. So yeah, I mean, everything I'm seeing points to another strong year this year, Greg. I would say I'm almost 100% certain that interest rates will go up this year.
Mhm.
I don't think they're going to go up, just like you said, to the point where it's going to kill demand. I think there's still going to be demand. What a lot of people don't take into account is the buyer pool is increasing.
Yes.
There's going to be more people turning 30 this year than ever before. So we've got this new influx of millennials coming into that age bracket where they're becoming first-time home buyers.
Yes.
But that's a huge pool of buyers that's just not going to go away,
Mhm.
right? So couple that with inventory still being very low right now, I'm seeing a very strong year again. I do think. I mean, I don't think we'll see the same appreciation we saw last year. I think it's insane to consider that that's going to happen again. But I think there will be some more appreciation this year in the market. Just
Yeah.
just not as much.
Yeah. Yeah. So I think we're in agreement, right? It's
Yeah,
going to be a
no
strong
question. Yeah.
market. It probably remains a seller's market.
Mhm.
If I was saying anything to a buyer, I would say, you should probably go ahead and buy now versus
Yeah.
taking the risk that interest rates are going to go up, and you have to, the cost of borrowing money increases, which is going to show up in your payments and the amount of interest. So I would say you should probably go ahead and get ahead of that. And then if you're a seller, understand that, yeah, if the market was to soften a little bit, it's just because some of the qualified buyers right now at today's interest rates, maybe a few of them won't qualify after interest rates go up. But again, there's enough demand. Like if that buyer cannot afford to buy your home, there's another buyer in our waiting room to actually bring to your home. So we should be okay. But if I was a buyer, I'd want to. As a matter of fact, I am a buyer. I do buy rental properties, and I've said to myself, I was like, I need to buy one or two properties towards the beginning of this year versus the mid-year, because I think interest rates will be higher. Again, I'm
Yeah.
not worried about that. It's just something I do pay attention to.
Yeah, I think as a buyer, if you're a buyer and you're thinking, well, let me wait till the market cools off, I think that
Mm,
could be a mistake,
yes.
right? Because it's going to cool off, but cooling off doesn't mean that we're going to see a retraction in sales price. Okay, but instead of seeing a 21% appreciation, we might see a 6% appreciation. So
Yes.
everything that we're seeing is saying that prices are going to continue to go up. Okay, not as high, but still go up a little bit. And then interest rates going up. So I think waiting as a buyer, I think might be a mistake. If I was looking to buy my home right now, or first home, I would be doing it sooner rather than later and get ahead and lock in those lower interest rates while we have them.
Yeah. All
Yeah.
right. Well, good. Well, let's take a look at the numbers.
All right, perfect. So let's start off with single family homes, which
Mhm.
we always do. Again, that number is still very strong. It's holding right around that 67, 68% of every single home on the market right now is under contract. We're still seeing the same thing. As soon as a home hits the market, it's selling fairly quickly. Now, there are some homes that are just sitting there and not selling, and it's a pricing issue. Right now, some people are being a little bit too aggressive and having a higher price, and some properties are sitting. But that number is 67%. Has just been holding steady for a while.
Mhm.
Super strong number. Again, as a reference point, a normal neutral market, we're usually around the 28% range. And so we're at 67%. Not quite as high as what it was, back in April and May of last year when I felt like that was the hottest point if you were to go back and look at the chart, but still extremely strong and holding steady at that number. That's overall all single family homes. When we look at the resale homes, which is what most of you out there are more concerned with, it's just under 60%. So that tells you there's still not a whole lot of homes out there for buyers. It's still a very strong seller's market. I think we've got about a 5-week supply of homes right now. So if no other homes hit the market in the next 5 weeks, and we'd be out of homes to sell. So
I mean,
definitely a
that's just
strong
no
seller's market.
inventory. I
Yeah,
mean,
yeah,
that's no inventory.
that's low.
And the amount of buyers that we have, and I mean, just in our office alone, we end up getting over 2,000 buyer leads, in a month, that go to our website, sign up for notifications to look at properties, etc. And so there's, we have more buyer leads come into our office, or at least that we connect with in a month, than there is probably inventory.
Yeah, yeah. There's no doubt. There's buyers waiting. They're waiting
Hmm.
for homes to hit the market so they can jump on them. Just to kind of put things in perspective, so we're about a 5-week supply of inventory. The national average right now is a little bit over 2 months. So we're actually outperforming the rest of the market nationally as far as how hot the market is as far as inventory goes. All right, let's hop over to condos real quick. And this is one area that just keeps fascinating me. I mean, it's just condos all of a sudden just on fire. There's nothing out there, no inventory. So 74% of every condo on the market right now is under contract. That's across the board. That's oceanfront, non-oceanfront, golf course. It doesn't matter where they are. Anywhere in town, there's only 400 total condos available for sale in the entire market.
Yeah, so it's outpacing the residential market now.
For sure. Yeah. Now all of a sudden, what we saw last spring with homes, now we're seeing with the condos.
Mm-hmm.
And now let's break down a little bit as far as let's look at the non-ocean front. Okay, so that one, 76% of all of them on the contract. The ocean front, again, is super strong. There's just no inventory out there for people.
Yeah, there was in the past there was a broader gap between oceanfront and non-oceanfront, and it seems like the oceanfront has now kind of like gotten a lot closer to just the overall look.
Yeah.
Outlook.
There's been a lot. I'm getting, and I'm sure you are as well, getting a lot of calls from investors wanting to jump in on the oceanfront condos. More so than usual. So yeah, that's kind of really depleted the inventory. There's just nothing out there right now. I do think, or I expect that inventory to go up as we get, next couple of weeks going into spring. Typically, we'll see inventory across the board go up. I just don't know if it's going to be enough to be able to handle the buyer demand that's out there.
Well, we got notified, by a bunch of lenders previously, and I think we talked about this maybe last time, and that is, there's a lot of conversations about increasing interest rates for second homes and investment properties.
Right.
So we'll see, number one, if they do that, and number two, if they do that, we'll see if that takes a toll on the on the market. Again, I don't see a market correction, but we could see, some sort of softening in the numbers, if that happens. But I think that could just be second homes and investments. And that's still if it happens. Sometimes they'll talk about higher interest rates, and that in itself kind of helps the economy rebalance at some nature. And then they decide, oh, we don't need to do it. We'll see what happens.
Yeah, the one thing we can't do is predict what the government's going to do. Right?
That's for sure.
So
yeah, that's for sure.
we don't know, but we'll be watching. Land, pretty strong, but holding steady somewhere around the 24%. That's still a strong number. There's still plenty of lots out there,
Hmm.
but not like a tremendous amount. People are buying them. A lot of builders are buying up these lots and putting up spec homes right now because how hot the market is for single
Yeah.
family homes.
Yeah.
So pretty steady across the board. Not a whole lot of changes. You would have thought come January there'd be a little bit of a dip, but there really hasn't been. It's just been busy.
Yeah, well, it's been one heck of a run. I mean, gosh, I'm looking at some of the numbers right now, and I'm helping a seller, multiple sellers, but I'm thinking of a seller right now on an oceanfront condo that unfortunately bought the property in 2006, and they bought the property for a lot of money. Let's just say it sold, maybe 250,000, and they saw that property go down to under
Mm.
$100,000. And I was able to actually sell the property recently for more than they originally bought it. So if you look at their original sales price to their to purchase price to their current sales price, we actually got all the way back and a little bit more. Now they may have lost some money because of negative cash flow along the way, but from a original purchase to sales price, they actually got their money back from that standpoint. And quite frankly, I was in the market in during the crash, and we wondered if they were ever going to see these prices again. Now it took 15 years
Right.
to get back here, and and they probably lost a good bit of money along the way because of negative cash flow. But it's amazing that it took 15 years to get back to where we are, and we're kind of there again. I'm always happy to say the difference between this hot market and that hot market is there just seems to be a lot of equity. So if the market was to shift, we shouldn't see people having to resort to foreclosures and short sales. They would be able to sell and still walk away from some equity. So I just like the outlook, and I think 2022 is going to be very positive for those people that are transacting.
Yeah, I love, especially on the condo side. I mean, there's a lot of condo owners that bought on the oceanfront, and they just
Yeah,
like, man, they just had the worst luck. They bought exactly at the highest point,
yeah,
and then it just crashed. And believe it or not, a lot of those have actually made it back to what they were.
yeah,
So this is it. If you haven't looked at your value in a while, you give us a call. I mean, I think you'll be surprised at how much you can get right now for your condo.
yeah. And there's our number right there at the bottom. There's my cell number, Abe's cell number. If you just want to chat and find out what's going on, in more in particular, not in the Myrtle Beach market, but maybe specific to your community or your building, give us a call. We love to just be a resource. Abe, thank you again.
Enjoy it, Greg. Thank you all
All
for
right.
watching.
Bye, everybody.
Bye.